Investing in stocks is not a gamble. It's a game of numbers, a meticulous analysis of financial data that reveals the company's true worth. Financial ratios are the compass that guides investors through this sea of numbers. They simplify complex financial statements into comprehensible metrics. Today we'll be steering our compass towards Apollo Tyres, a company that has caught the attention of many investors. With the right tools at hand, every investor can make sense of these numbers. Let's dive into the financial ratios of Apollo Tyres. Apollo Tyres' numbers tell a story of their own. Let's decode them. Starting with the price-to-earnings ratio, or PE ratio, Apollo Tyres stands at 24.98. This suggests that for every rupee of earnings, an investor is willing to pay a rather high price for a share, making this stock appear overvalued. Moving on to the share price, it hovers around 471 rupees and 45 paise. This piece of data, combined with our valuation calculators, can tell us whether the share is undervalued or overvalued. Let's now turn our attention to the return on assets, or ROA, which is a mere 2.69%. This indicates that Apollo Tyres may not be using its assets to their full income-generating potential. Next up is the current ratio, sitting at 0.96, suggesting that the company might struggle to cover its short-term liabilities with its short-term assets. Apollo Tyres' return on equity, or ROE, is 5.96%. This tells us that the company generates a modest profit from its shareholders' investments. Their debt-to-equity ratio is 0.41, showing a low proportion of debt in its capital, which is a positive sign. The inventory turnover ratio stands at 7.3, which could indicate inefficiencies in the company's inventory and working capital management. Finally, the company reported a revenue growth of 18.10% and an operating margin of 12.21%, which is respectable. However, the dividend yield is a meager 0.95%. These numbers provide a snapshot of Apollo Tyres' financial health, indicating areas of strength and potential red flags for investors. So, what does all this mean for potential investors? When we look at Apollo Tyres' financial performance, the picture is mixed. A high price-to-earnings ratio and a low return on assets suggest some caution. However, a low debt-to-equity ratio and fair sales growth indicate strength. The company's operational efficiency and dividend yield paint a similar picture. While numbers can guide us, remember that they are just one piece of the puzzle. Always consider a wide range of factors when investing. After all, in the stock market, knowledge is your greatest asset.